Today, the markets did something special. And to my knowledge, this really hasn't happened yet in 2025. So it could be a sign of good things to come for the bulls, for the people that have been buying stocks out there. The markets actually showed some strength going into the weekend. You see, throughout 2025, investors have been selling out of their portfolios headed into weekends because nobody wants to hold their stocks over a weekend during such a volatile and uncertain time period like the one we're experiencing today. So this could be a sign that the markets are growing more confident in their outlook for the economy, and it could be a sign that the markets are starting to fully price in the added volatility and uncertainty that Trump's second presidency so far is bringing to us. Now, everybody was convinced that today was going to be another horrible day for investors. The markets were down more than 2% at one point today, but all it took was Jerome Powell coming back out of the woodwork saying the economy is fine and it doesn't need us to do anything. From that point forward, the NASDAQ just rallied endlessly into the close, rallied more than 2%, and finished up basically 0.75% today. That is massive strength going into a weekend during a time period that is relatively uncertain and very, very volatile. I think this is probably the most hate that I have ever gotten for buying stocks. And it checks out when we look at, consumer sentiment or investor sentiment right now. This checks out. Less than 1 in 5 investors are bullish right now, meaning 4 out of the 5 of you clicking on this YouTube video are bearish or neutral on the stock market moving forward. And only 1 out of 5 agree with my thesis that this is a good time period to be buying stocks. Now, I got a question the other day. Somebody asked, why does investor sentiment matter? It matters because it tells us what the market is or isn't pricing in at any given point in time. You'll see the top chart here. I showed this in yesterday's video as well, but the top chart here, the bull to bear ratio is 0.34 and the average over time is 1.17. Bearishness is as bad as it was back in 2022, and it's actually worse than it was back in 2020 when literally the global economy was shut down. That should speak volumes of the current mentality of investors right now and what they're pricing in. Clearly, investors are pricing in recession. They're starting to price in doomsday in the economy and a stock market that, we've had 2 years of 20% returns, so we're due for a really, really bad year in 2025 just because of that. So everybody is they can't get their hands off their stocks fast enough. It's so funny. Investors go from saying, I love buying stocks to now saying, well, I love buying stocks unless things are uncertain and unless Trump says some things and, unless stocks are falling. If stocks are falling, I really don't want anything to do with the stock market. No, I don't. That's the mindset that makes retail investors fail over time. And by the way, how quickly have we forgotten the 2023 stock market and the 2024 stock market? Do you guys remember in early 2023 when we had a regional banking crisis? Regional banks were failing. They had to be bailed out. And we had a stock market correction. The stock market fell basically 8% during that time period. And then from late July until late October, the stock market also had a correction of basically 10% before rallying to end the year. So these painful time periods are not, we experience these even in raging bull markets. These things happen. Just because this happens doesn't mean we're about to enter a bear market and this is the end of the current bull market. No, and then 2024, I just showed you 2023. 2024, this is a different looking chart. But this shows you in August, do we remember the yen carry trade unwind that had the markets in an absolute panic? Yet to end the year, the markets rallied. They got over it. They got past it. And the markets finished with another more than 20% gain. So despite all of these difficult time periods, the stock market's it's been just fine. It's actually outperformed historical averages. So back to investor sentiment, why does it matter? It matters because more times than not, the markets are wrong in what they're pricing in. It basically shows us where the bar is. I'll use the example of big tech earnings this previous earnings season. They had very strong earnings reports, but for the most part across the board, those companies' stock prices fell because the bar was so high. They weren't weak results. The bar was just so high. It was very difficult to jump over the bar. And as a result, their stock prices fell. But as the bar is getting lower day after day after day right now in this current market, eventually good news always comes. And I'll talk about that in a little bit. I think the markets are actually very much so misguided in what they're pricing in. But eventually the bar gets lowered enough that any sort of good news makes the markets able to jump over that bar. And all of a sudden, the markets are moving back in the positive direction. We can also look back at 2022. This was the most anticipated recession of all time back here. Investors were incredibly bearish. And, I feel like I was one of the only people in financial media that was out there buying stocks and communicating that I was buying stocks. And the markets back then were wrong in pricing in that recession. And the people that were buying stocks back then have benefited tremendously since then. Tremendously. So right now, I actually think investor sentiment's going to flip back into positive territory very, very quickly. Now, today was actually a really good day for the members' portfolio. I really haven't talked about this much on the public YouTube channel, but I basically said, okay, I've proven I can do it before, but let me prove that I can do it again. So we started at ground zero, $0 in the portfolio. Every week I deposit $100 and we go out and buy stocks. We've been doing this for 7 or 8 months. And it's been rough. You can see by the total gain and loss columns. On Symbotic, I'm down 5%. CleanSpark, I'm down 10%. Fluence Energy, I'm down 31%. One Stop Systems, I'm down 11%. I started this portfolio probably at the worst time I possibly could, but man, I love the additional challenge. And hopefully by the end of this year, already I can prove to you that you can start with a very, very small amount of money and build a portfolio of significant size over time. But I actually hope the markets keep falling and selling down the valuations of these companies so I can keep lowering my cost basis even more and more. I actually like when the markets fall. That's a contrarian point of view, but I love it because I get to buy more stock in companies that I love, and I think that's a great mindset to have, but it's a difficult mindset to have. I'm going to be doing more buying on Monday. Hopefully, the markets sell off on Monday, so I can get some more deals. If you want the buy and sell alerts and access to this portfolio, I try and make the membership the best investment anybody can make. It's very, very cheap. You can get into the membership in the Discord server for like $5 a month. If you want to buy and sell alerts, I think it's $10 a month. But check out the Patreon link in the pinned comment or hit the join button located right next to the subscribe button. By the way, subscribe if you're new here or returning not yet subscribed, and hit that like button for me if you wouldn't mind. But yeah, I don't know. The portfolio so far started it at the worst time possible, but I think I'm getting tremendous value, and I think over time that will be proven. Just a side note, Fluence Energy, I love the value I'm getting there right now. That's actually the stock I'm down most on right now. 31%. They had an earnings mishap, even though the earnings still came in with, significant growth, and they're forecasting 26% revenue growth this year. Oh well, markets can sell it down if they want to. They've had massive insider buying recently, and they just reported another insider purchase today, actually, on an SEC Form 4. Herman Bowles purchased another 10,000 shares for $5.40. So you can do the math. That's over a $50,000 buy. The CEO purchased shares a few days ago, like $150,000 of his own money that he put into it. The CFO bought $100,000 worth of shares. The stars are aligning for Fluence Energy. I hope the markets don't see it so I can keep buying. But I don't know. I'm optimistic there. So don't think I've lost faith in Fluence Energy. I think they're in for a massive recovery already when they report their next earnings, because I've talked about it before. Go watch my Fluence Energy video. I've talked about why I'm bullish and why I think the markets are wrong about Fluence Energy right now. But let's talk briefly about what sent the markets into a panic this week. And I've mentioned this a couple times in recent videos, but I want to add to it because I think this is really important to understand. The Atlanta Fed puts out a GDP model that estimates what GDP growth will be every single quarter. They're historically very accurate, which is why the markets were sent into a frenzy when they anticipated or estimated that GDP growth in Q1 was going to be negative 2.8%. And this actually just got revised higher to negative 2.4% today. But still, negative 2.4% GDP growth has the markets concerned that we're headed into a recession. Now, the extra research that needs to be done here, and I don't think most people recognize there's additional research we need to do. We need to look at what contributes to the Atlanta Fed's GDP estimate. And this here shows it. It's household consumption, business investment, housing, government spending, net exports, which is exports minus imports, and change in private inventories. What have we seen basically in December and January? We've seen imports absolutely explode because we've had corporations, businesses try and front run the tariffs that are going to be implemented by Trump's first presidency. So based on that, it's an aberration in the data that is not indicative of a weakening economy or a slowing growth economy. This had a negative 3.57% impact on the GDP estimate, which is why it was revised lower to negative 2.8%. But people don't realize that it's simply a timing delay. The reason imports are subtracted from GDP is because it's not representative of domestic production. It's representative of domestic consumption and investment in building of inventories, which you'll see household consumption, business investment, and change in private inventories are three other categories that impact projected GDP growth. That offsets any sort of negative impact that imports have, but that data has not been reported yet. Household consumption for the month of January, not reported yet. Business investment, not reported yet. Change in private inventories, not reported yet. So we have a timing issue that is showing GDP growth at negative 2+% for Q1. People don't realize that when these imports show up in the consumption, investment, and inventory data, this is going to reverse, and Q1's estimated GDP growth will go positive again. And when that happens, the markets are in for kind of a shock to the upside, in my personal opinion. And I actually have it written in my notes here. The trade deficit widened by 27% in January. Again, a short-term aberration in the data. It's an outlier, and it will be corrected over time. And I'm not convinced the markets understand this, but I hope they continue to misunderstand, again, so these stocks that I love keep getting sold down in valuation. And one note here on consumption, the consumption data we've gotten is from January, but you guys will remember January was a record cold month of freezing temperatures. It was the coldest January since 1988, which, yes, that slows down consumption because people stay indoors. They don't go out and spend their money in the economy. We have already seen, if you look at Redbook retail sales data, retail sales have bounced back in the month of February and then in the month of March. But that data, the rebound in consumption, we don't have that data yet. And when we do get that data, again, that's going to reverse this negative print from imports and send this GDP estimate back into positive territory for Q1. We've only gotten 1 month's worth of data for the quarter. We still have to get February and March's data, which will come, of course, in the coming weeks. But I don't know. I don't think the markets recognize this yet, but I'm excited. I'm a firm believer that volatility is just the price we pay to invest. When you can recognize when the markets are getting something wrong or they're pricing in something incorrectly, you can take advantage of that. And it can be painful in the short term. I mean, you should see how loud the naysayers got, over the last few days. When I've communicated, I've been buying stocks hand over fist as much as I can because I think this is such a great opportunity. And today, the portfolio had a good day. The markets had a good day, and those naysayers they went back into hibernation. So I have zero respect for those people. It's one thing if you talk your talk when the markets are down, but you also continue to talk your talk when the markets are going my way and they're going up. I can respect that, but the people out there that are naysayers and they just hibernate as soon as things don't go their way, I have zero respect for those people. But as always, time will tell. I don't have a crystal ball. I can be wrong. I will be wrong in the future. I just do my best on this YouTube channel. I give you my analysis of the current markets, my stock picks, etc. And I know you guys appreciate that. It's why the channel's grown so much. So I can't thank you guys enough. I probably focus too much on the naysayers and not all the positivity and the support that you guys give me. So I can't thank you guys enough for that. I'm going to keep this video pretty short today. I hope you guys have a great weekend. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.